Well, g'day there, everybody right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this weekend market update. A very important weekend to be talking about the US financial markets. What we've seen over the past shortened week's worth of trading is the NASDAQ definitively break above our trigger up here at 6,815. Now, although I don't have any positions in the Qs, I am still looking to leg into some positions on the diamonds and SPYs, which is what I'll be speaking about in due course. But before we get there, it's very impressive to note that the NASDAQ has simply gone through a very short-term, very brief, albeit very minor, sort of retracement in terms of its consolidation as we've allowed these oscillators to reset and just to see once again the ferocity of buyers to jump back into the market and to really aggressively push it into new all-time highs. You can see for yourself on the NASDAQ, what we've done over the past month or so is simply just retest that rising 20 exponential moving average. Now again, a very aggressive conclusion to this sideways sort of short-term stagnant market, with that being, of course, the conclusion of price breaking to the upside. Now, if we zoom on into a number of trades that we've been focusing on and waiting for, one in which is Amazon. Now, Amazon has definitively broken above all three of our bullish trade triggers, and as it stands on Friday is a tremendously profitable stock. So I just wanted to first of all congratulate those who took the trade. I mean, we've been speaking about Amazon first of all since its earnings gap, and then this particular continuation pattern which presented itself, or at least started to actually construct towards the end of October and really pronounced itself early in the month of November. It has taken about a month for the conclusion of this to actually come. But as you can see, really since Tuesday this week, we started to see the advance. Fast forward, of course, to Wednesday. I think we closed up about $18, $19. And then, of course, yesterday during Friday's session, we closed up another $29.84. So if you took the trade at 1125, if you took the trade at 1140, if you took the trade at 1145, here we are as at the weekend, and we're closing just shy of $1,190 per share. You tie that into, of course, option contracts. You start tying in some core contracts. I mean, that is a tremendously profitable share. And I just wanted to recap that and congratulate you on taking that actual position. Now, if I rewind this, I've just sort of noted some of the advancements with the NASDAQ. Of course, that has been largely calibrated through, of course, to the breakout in Amazon. This also extends to some other stocks as well. We've got Apple, which is very close to breaking out. We've got Facebook, which is on the precipice of breaking out. We've got Google, which is, again, very soon to actually retest that earnings candle high with that long upper wick. But then we start drawing it back and start talking about some of these other markets. We've got the S&P 500, which did close at new all-time highs and is very close to breaking out. What I love about this particular market is that it has gone through more so of a withdrawn sort of consolidation. It has lasted that, or at least longer than that of the NASDAQ. You can see we are still bouncing off these exponential moving averages. Everything is looking a-okay, but what makes this even more compelling is the simple fact that the ADX has actually allowed to reset. I mean, we were down here below 20. We've turned up, and as such, we're resting at 25. You can see this turn take place on the ADX. This is telling us that the trend breakout is assumed to be legitimate. Also, we've got the commodity channel index, which is still holding above 100, which is very good. This is telling us that the trend is still in effect, and we don't have any signals whatsoever to inform us that the trend has definitively reversed. If anything, this is the beginning of the new up leg advance into December 2017 to round out the calendar year and also take us into potentially the first quarter of 2018. Now, one of the markets which hasn't actually broken out, we've got the NASDAQ, which has advanced quite aggressively. We've got the S&P, which has just closed at new all-time highs. And here we are with the Dow Jones Industrial Average. Now, the Dow Jones is still pulling back off from those highs. We did temporarily close at new all-time highs on Tuesday. On Wednesday, we developed some short-term resistance. On Friday, we have a little shooting star candlestick on very low volume. Of course, that's to do with the seasonality of this time of year. But what I like about the Dow Jones Industrial Average and that of the diamonds in particular is that we haven't actually broken out, and it really is the last market to confirm the movements which are already taking place on the NASDAQ, and of course a plethora of trades in our top 12 list which are largely sort of tied into the NASDAQ, but also we have a bunch of other trades which are still looking to confirm to the upside, in particular Caterpillar and also COP. Okay, those two particular trades relevant to the Dow Jones Industrial Average. So as you can see, we're building resistance up at this area, and there's a very nice opportunity if you want to tie in some contracts around the diamonds. Ticker symbol DIA. That will give you exposure to any advance which takes place on the Dow Jones Industrial Average. What I'm personally looking for is to see the market move above, close, and then continue above 23,639. We got very close at this level during the week. We didn't actually sustain above it or really move above it whatsoever, but this is just short-term resistance, which again is looking to actually crack maybe potentially for the last trading week in the month of November as we usher in, of course, December, the 1st of December, which is going to be Friday's day's worth of trade. So the markets are looking very healthy. I'm very excited about this. This is also extending into a lot of our individual trades. We've got Apple, which is continuing to the upside. We've got Amazon, as I've already mentioned, which has just gone absolutely parabolic. Boeing Airlines, which is just sitting fantastically well. Baidu is a little bit of an outlier. That is a relatively bearish sort of stock in and of itself. The same with Tesla. Tesla is an exceptionally bearish chart, and it's something that I've got up my sleeve, so to speak, to talk about and to look for at a later date if we start to see some major reversals take place off from 330 or even 340. We've got Netflix, which is still holding up above its macro support area, which was once macro resistance for the majority of 2017. We've successfully held above it. We've got IBM, which is bouncing. Goldman Sachs is a dog ugly chart at the moment. We've got Google, which again is trying to pierce above the earnings candle over here, a precursor, of course, to what has happened with Amazon. And again, I've already said this, but it ties into Facebook and also Apple, Google. They are all largely the same. They are moving, of course, in relative sort of congruence to one another. There is some form of, I guess, correlation between these stocks and market advancement. So again, as you see one stock break above its recent swing high and go parabolic, it generally ushers in the same, albeit not as strong as aggressive of what as Amazon has done, but also to a lesser extent, just the general direction of these stocks as we round out the month of November and usher in, of course, December 2017. We've got COP holding support, looking to bounce. Caterpillar's fantastic. We've got this really nice Bollinger Band setting up. I went through this in great detail over the weekend, but this is another stock which is looking really well. All in all, these markets are just, they don't know any other direction other than up, albeit if it just enters into a very brief short-term sideways consolidation. We've got the transportational average still holding that macro support. I personally thought it was going to hold in this green box, but we did come on down a little bit further and just retest the main pivot for 2017. You can see we're still holding. And really the sign for the industrial average moving higher, as long as we hold above this purple box on my screen right here. So it's a little bit of a cheat sheet for those of you watching. As long as the transportational average holds above this purple box, you can assume that the industrial average is still going to continue. That's sort of integrating a little bit of Dow theory, albeit with sort of mixing or blending the actual principles or the concepts of the theory itself. The transportational average is not up here close to 10,000. It has pulled back a little bit. It is sitting at 9,620, but it is still constructive. And essentially what we're doing is we're just pricing in that next higher swing low. So you can just see that for yourself. And also on top of that, we've got a series of higher highs. So the trend looks to be, of course, bouncing off from this level, and this is the beginning of the next up leg. If I continue this discussion into the Russell 2000, unlike that of the transportational average, we've held the green rectangular box, and you can see the parabolic rise since doing so. It was only one candle. It was Wednesday the 15th where we had that long lower wick, and really since then it's just gone up. We've now just taken out the swing highs dating back to earlier in the month of October. And again, this is looking very aggressive. So we'll see what happens. We'll monitor what happens with the Russell 2000, the transportational average, but there is some exceptional opportunity on the diamonds. There's some exceptional opportunity on the SPYs, not to mention a lot of trades in our individual top 12 individual trade lists. So a very constructive week that we've just had in that analysis class. I encourage you to have a look at it. There's a lot of, I guess, action happening in the financial markets. We have moved through a rather stagnant period for a number of weeks, but things seem to be, of course, working out and continuing in the underlying trend direction. If you have any questions, scroll down to the description box and click on my email. You can send me an email anytime. Other than that, I just wanted to wish you all a very nice weekend, and I'll see you next week in some more market updates as we unravel what's occurring on the financial markets. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.